Good morning, guys. So audio should be on now. So guys, thanks so much for joining me this morning. Today is March 5th, 2020, and it's 20 minutes past 10 a.m. in London when I'm doing this market update. Starting a little bit later than usual. Reason for that, just been trying to put out some fires this morning. So that's about it. All right, we're gonna take a look at the markets, see what's happening here. So Euro USD. Yesterday we said look to buy here for it to go upwards. We're pretty much where we want it to be. Might go a little bit higher today, but it's not a bad little trade here. The idea was pretty much just to buy here and stop loss just below it. As you can see, I tighten this up now, and but the risk reward ratio, if you will close it now, is about 0.92 or so, depending exactly where you put your stop loss. So it's not a bad little trade in the last 24 hours. Before that as well, we said look to buy here for this to go upwards. Now, even though the trend is bullish, and even though we've been getting it right here in the final leg, and technically as long as you trade about 110.84, we can continue to trade upwards. There's a risk here that this rolls over. The Fed just cut 50 basis points. The market is projecting, according to some people, another 25 basis points cut at the next meeting, and it's almost a 72% likelihood that they're going to cut with another 50 basis points. They might cut, but that 25% cut is already been priced in, and then you have potentially 50 basis point cut, which would be like a full percentage point in just a month. Maybe that's going to happen, especially if things go really bad with the virus in the US. There's definitely signs of panic over there, as there is in the rest of the world. And what can happen here, I think, is that what's happening here, I think, is that we could potentially have a situation where that's already priced in. On the other hand, Europe is not doing anything right now, and maybe they will do something. And that is, I think, the risks here, especially. And then if you look at just from a purely technical perspective, we had a nice little rally to the upside, but just up below this high, and as long as trade below 112.35, we may potentially reach something like 140. But so you want to keep an eye on this. But if not, for now, just I would remain bullish. But if we trade below 110.84, then we're probably going to go down again, maybe down to 109.99, which I think seems likely. But again, the trend is your friend, and the trend is bullish. Oh well, 110.84. All right, so this is the GBP versus the USD. So the market has gone upwards here, and the reason for this again is a bit of the dollar, people pricing in another rate cut. But I think as well, yesterday was some comments from the new Bank of England governor, and he pretty much said that, I didn't read into all the details, but the headlines pretty much said that they're not looking ready to cut right now. We'll see about that. We'll see about that, because what's interesting is that the Prime Minister of the UK, Mr. Boris Johnson, he said that a fifth of the UK workforce could be sick at the same time. Why would he say that unless he anticipates or projects, his specialists project that it could be there? Is it the worst case scenario, or is it the likely scenario? Well, given that there's no checks really, it's more likely that we'll have a significant amount of the population affected. And anybody that's been dealing with the NHS, thankfully I don't have health issues, but anyone that knows someone that has been in with the NHS, that like many of the other European health systems, it's struggling badly. So it might not turn out really, really good. So I think eventually they will be forced probably to do a rate cut. At least they're going to follow through. And I think the ECB, again, is going to follow through. So if everybody's cutting rates, why shouldn't the Bank of England cut rates? So I think that's going to come in play. But right now, it's sort of a race to the bottom, where everybody's sort of cutting rates to support their economy. But now, following yesterday's comments, you have that little twist here, and this goes upwards. And that rejects the bearish view I had in the short term. And we can't really do so much until, because later, it could easily be today or tomorrow when the number of cases jump, that they could say, you know what, guys, we're gonna cut, and I think that's probably what's gonna happen eventually. But for now, at least in the short term, this market took out our trend funding levels, and this market in general has been following this sort of path where it corrects quite a lot. And I don't really recommend that. I don't really do that. If I've been stopped out in one market, I don't jump into the same market immediately, because if it's a loser, then you're gonna be like beating yourself up and say like, oh, I shouldn't have done that. But and then mentally, it's not the mental problem is usually not the mental problem, but that stress is probably the biggest issue. But if you're looking at this with fresh eyes and you haven't been trading it, and if you look at it realistically, we're still dealing with a downtrend. The trend is still bearish below this high. So it makes sense to maybe sell up here. But again, it's probably not the best opportunities out there, but this is something. So if someone put a gun to my head and said, Alex, you need to have a position, I'm going to buy or sell, I'm going to say, okay, I'm going to sell. I'm going to try to sell maybe up higher here. But again, I don't have a gun to my head, so I won't be trading this one. All right, this is the dollar yen. And the dollar yen is a bet if you think that the dollar yen is going to catch up with stock markets. We have seen some decent gains in stock markets. I traded that earlier this week. That went well. But the dollar yen hasn't been catching up, because it appears right now, at least, that forex traders are not they're not seeing what stock market traders are seeing. What stock market traders are seeing, as you probably understand, they're seeing, oh, that's my favorite company with high, nice dividend yield, or that's my company. And for example, like Apple, people are still going to be buying iPhones 1 year, 2 years from now, 3 years from now, 4 years from now. People are going to use the airlines again. So people are looking at these and say, okay, airlines or some of these other leisure companies, 50% discount. Of course, people say, I'm going to put this in my portfolio. And they do. That's why stock markets are going upwards. Because some of these industries are definitely coming around, and it's easy. You can just sort of calculate how much money are they making today, how much are they worth, and all this stuff. It's very difficult to do that with a currency. And in this situation, do you really want to be buying the dollar? And I think that's what people are saying. Probably not. At the same time, do you really want to buy the yen? It's more difficult. You don't have that case that you can say and talk about in stocks. But again, technically here, there should be some sort of correlation between the dollar yen and stock markets. And technically, we are just above this low. So I'm going to continue to be bullish from a technical perspective here. But as I've been saying over the last few days, it's not the best opportunity out there. If we move along here are gold prices. So gold prices here, I think, make much more sense to be bullish. Of course, we don't necessarily want to be buying here, even though there is an opportunity. Right now, there's an opportunity unfolding, and it's for people that like scalping. So this is an ascending triangle, like that. You got that horizontal resistance. You got 1, 2, 3 highs at the same level, and then you can put a little trend line like that, and that's your ascending triangle. And how do you derive the target? Because it's a small pattern, I'm going to take the base, which means I'm going to take it from here and like that, and then that's a $23 move. So if we go up here, we'll get that $3 move. What's the biggest problem with these small patterns? Is that they don't necessarily need to develop. So if you're looking at this from a big picture perspective, then I would still insist that you're looking at 1603. That will be the better option to get involved. In fact, maybe we can push this up a little bit to this high here, and like that. So I still prefer buying that dip, and obviously the way things are progressing, I do think in the long run this will continue to be bullish. You got those fundamentals. People are scared. Even now, already a little bit in London, you can see some stuff getting empty. Like so yeah. Dips is my preference, but you also have that little short-term setup there. Crude oil prices then. Crude oil prices has been working out as we wanted it. The idea was to sell here. The market declined. The market went up to the sell zone. Now it's moving back down again. So there's no secret what to do here. If you're not already short, then people are going to wait for that little bounce to the upside. German DAX. Okay, so this is the German DAX. And yesterday we had some decent little push to the upside. So the idea was to buy here. The market went upwards, which is fine. and that was good actually. And now it's pretty much revisiting these levels. And I suspect we could continue to go upwards. But then again, what's happening with the coronavirus? And what do I think is going to happen going forward? Let's take a look at the numbers today for the virus. Okay, look at that. This is Italy. So on the 26th in the morning, so 7 days ago, well, 8 days ago, we had 322 cases in Italy. And we talked about this before. Where is Germany, France, UK today? Well, they are at these levels. It's very likely, because there's no, the strategy is different in Europe, that you'll see these countries have similar numbers as Italy. And Italy should be close to 14,000 by next week if the growth rate continues. And I think that could potentially be the trigger, because I think what's going to happen is, as I mentioned many times before, is that when people start dying, there's going to come pressure on the governments to close their cities. And look at that, Italy. I didn't know this. 107 dead people. It's quite a lot. It's higher than South Korea. So I think there's going to come pressure, but then at that point, you're already going to have I'm not saying it wouldn't help. It will definitely help, but you would already have so many affected people. And again, in the UK, they're pretty much telling you that 25% of people will be sick at the same time. So what does that mean? That maybe 40% of us are going to get the disease. And then what happens is the problem is when everybody's sick and it just takes longer to purge this thing, and then they're going to close down the countries, the borders. That's when they're going to say, well, you can't fly here, you can't fly there. As an example, Australia has now, I think they're if you've been to, they're blocking flights from South Korea, and they're starting to screen more people from Italy. And I think more and more of that's going to come. What does that mean for our trading? It means that if it could potentially means like this. If we're like at 2,500 by next week in many of these other countries, you can start to see more and more panic in these countries. And I don't necessarily think they're going to be buying stocks at this moment, at that point. So it's more of a short-term play where I think the cuts and all the stimulus from all the different banks may push things to the upside. And I traded the Dow Jones. To give you an idea, I traded the Dow Jones from here up to here, more or less, okay? So I made that little push. And I still think we can go a little bit higher in the German DAX. But then we need to understand that if things really go bad this time next week, then there's going to be more panic selling. And if we take up the August 2016 low, we can go lower. And then who knows, maybe we're going to have like a massive decline as we had in 2008. At that point, the DAX declined with 36%. Sorry, this is in 2011. I don't have data for the whole period here. But I don't necessarily think we're going to have that big slide. But if we go down 22%, 30%, then that would not be unsurprising. So we need to be flexible here. And then again, you have the stock market investors. They're just seeing these companies 50% discount. And that's where they're buying. Now, not everything is bad news. If you take a look at this, China has managed this very good because they did quarantine off people. So they have 53 people recovered in China, 53,000. And the total number of people that were had the disease, the severe form of the disease, is 80. So they're opening things up. So this looks, at least for now, 2 months since this started, this is going to be over. Fortunately, I don't think it's going to be the case in Europe. I think we'll still be talking about this by summertime. But let's see. I hope I'm wrong. As for the S&P 500, the idea has been to sell here. So put the trend defining level here, and we had that little push, and I'm treating this, definitely I'm treating this a little bit different. compared with the German DAX. But this has already rallied quite a bit, and the idea was look to sell here for this to come down, and it did, and then it went up here, and then it went like that. And I'm sorry if I'm confusing you, because what I did here, I'm doing two different strategies at the same time. The longer term for the DAX, and that sort of bounce back, and here we're sort of moved up quite a bit already. And what you want to be looking at here is 3140, which is this level here. If we take that out, we'll go upwards towards this low, this high, and this low here. We'll go upwards. And I think at that point, maybe this would have developed to a major low. But again, because of the virus, it's a bit tricky. But again, take this up, we're probably going to go up, and then down, and then up again. So what's your strategy here then? If you are bearish, you think things are just going to go bad, then you would look to sell here, as we talked about. And if you're looking to be a buyer, you could potentially be buying down here, even though I would prefer to buy the German DAX, because your reward ratio there is better. Okay, let's see if you guys have any questions. Actually, let's take a look at Bitcoin. I saw this, a colleague of mine on InvestingCube published this. This is a tiny head and shoulders and Bitcoin. So this little move happened at 9 a.m. London time. And you have that little break here, or that little difference, and that suggests we can go up to 9,516. And in regards to the bigger picture, there's so much overhead resistance here that could cause problems for this. What would have been very interesting actually is if this would have been a deeper correction like that. Because then you could probably argue that this is a head and shoulders to some extent, with this sort of pattern. You can still kind of sort of call this a head and shoulders pattern. But yeah, that's the short-term levels. Let's see if you guys have any questions. So we talked about the coronavirus, and Tato says, thanks so much for daily updates. You're welcome. I'm happy to help. What is the dollar Swiss rule during crisis like this, Corona? I short at 95.65. So in the case of market turmoil, the Swiss franc tends to see a boost, so it tends to gain in these situations, because people like the safety of the Swiss franc. The Swiss franc as well has very low inflation, which means that it doesn't lose its value very easily. And that is something as well that people like. Looking at this today, the market is trying to trade below 95.35, and if we take that level up, we can go lower. If you look at this from a short-term perspective, you're dealing with this little break here, and at least in the short term, and I'm tightening things up quite dramatically here, as long as you trade below 96.08, because it is attempting that breakdown now. So if that breakdown fails, it's going to swing back up, because you have people here shorting, getting excited by the move to the downside. And then if it goes up like that, these people are going to say, oh no, that break didn't work out. And then you can have a little bit of a bounce to the upside. So for now, technically, I will be bearish below 96.08. And it might go up to maybe 95.60 very easily, but I think it's going to come down. Okay. Let's see if you guys have any more questions. Otherwise, we're going to wrap things up. Because you got a question about dollar CAD. So let's take a look at that. Okay, so this is the dollar CAD. And yesterday, the cut. So what's happening here again is a bit of a race to the bottom. And because the Canadian economy, they export a lot of energy products. So what's happening here, I think, is because crude oil is going down, this is going upwards. As well, the Canadian economy is a commodity-based economy to some extent, and it's a smaller currency than compared with the American dollar. So in times of turmoil, people would prefer dollars than Canadian dollars. So that is also lifting things. So a few days ago, we still looked to buy here, and I think we did talk about it here as well. And this trend defining level here for now remains the level that we will look at. And the way this is looking right now, I could potentially trade a little bit higher to maybe 35.25. Okay, guys, we're going to wrap things up. Don't forget to like the video. And if you have any questions or anything like that, don't forget to reach out to me via AlexFX00. Have a great day. Bye bye.